Hello. Welcome to Forex Central YouTube channel. Your way to financial freedom. For more information, make sure to check our other videos in this channel. Before you continue, make sure to like, press the subscribe button, and hit the notification bell icon to receive notification updates every time we upload new videos. Claim your Forex trading course tutorial videos for free. Just press like, subscribe, and hit the notification bell. To receive your free Forex courses, please send us your email address at forexcentralofficial@gmail.com with screenshot of your visit in our YouTube channel. We will send it through your email. Thank you. Now let's go for today's video. Forex Central gives special credit to Mohsen Hassan, CEO of MTG, for sharing his expertise and knowledge in Forex trading. Your dedication and commitment to educating others are truly appreciated. We are grateful for your contribution to this Forex Foundation training course.
So I gave an example about converting US dollars to Mexican pesos. And I said it was $1 US to 20 pesos. Well, what is that? How do we talk about this? When you talk about a currency in relation to another currency, we call this a currency pair. So you'll often hear this term. What currency pair are you trading? Which pair are you looking at? So a currency pair is just quoting one currency against another. So USD to Mexican pesos, or any combination of currencies. Now, in this currency pair, there's two currencies. You have the base currency and the quote currency. The first one is going to be your base currency. And the second one is going to be your quote currency. So if, let's say for the previous example that we had, and I said USD, let's see here, USD to Mexican pesos, okay? Well, we would have said that this here, the USD, this is what we would call our base currency, okay? It's our base currency. And the Mexican pesos is our quote currency, okay? So this would be the base currency and this would be the quote currency, okay? Because you're saying the base currency is always one, right? So you're saying $1 US, how much can that give me in Mexican pesos? So the first one, the base currency, is the one we're relating to, saying, well, how much one of this is going to be worth in the other one. And the other one, the second one, the quote currency, is the one we're quoting. So we're giving a quote on it. We're saying, well, we're quoting a price of $20, 20 pesos for this $1. Or we're quoting at 18 pesos 0.7 for $1. Okay, so this is the base currency, quote currency. Now, the way we write these currencies, why didn't we just write US? Or why didn't we just write peso? Why did we write this? Because each currency is identified by its ISO currency code. ISO stands for International Organization for Standardization. And basically, if I open it here, okay, so you'll see that for each country in the world, you have a code, right? The ISO code. And this code is 3 letters. And let's say if I go to Canada, and it's just a standard, so everybody can understand each other. For Canada, the code is CAD, so CAD, and it tells you here Canadian dollar. If you want to go, I don't know, China, CNY, yuan, right? Yuan, renminbi. Those just call it yuan. So you have for each country. So if you don't know what the code is for the country you want to trade, just go on this list and you'll find it. If you want to go to the United States, you have USD, US dollar, okay? And don't bother with these. Don't need to look at those. And yeah, so you have all these countries here, and you can just Google ISO code and you'll get to a bunch of different websites that have the same codes. Now, let's just go back to pound it in just a bit more. So if you have a currency pair of, let's say, USD CAD, and the price is 1.35, you would say that the base currency is USD, quote currency is Canadian. And so this is the quote for the USD against Canadian dollar. the quotation of 1.35 means that $1 can be exchanged for 1.35 Canadian dollars. So keep this handy if you always get confused. But by the end of this course, this for you is going to be something very simple. So not all currencies are equal. And when I say they're not equal, I'm talking about trading liquidity. So not all currencies are traded as much as one another, right? And you probably know that the currency that is the most traded is the US dollar. And it's actually the most traded when you compare it to other currencies. The second most traded one is the euro, and the US dollar is traded 3 times more than that around. So it's very, very liquid. Now, the countries or the currencies that are most traded, we call the major currencies. And this is the list of the major currencies here. Now, I didn't put them in order. It is true that the US dollar is the most traded one. The euro is the second, but I didn't really put these one in order. They might be, they might not be. But yeah, you have the Japanese yen. That's very much traded as well. The British pound, Australian dollar, Canadian dollar, and Swiss franc. So these are the major currencies. Now, because of that, we have what we call the major currency pairs, right? And these are just pairs that are very, very liquid. So very widely traded. So you're not going to find pesos to, I don't know, Japanese yen. It's not traded as much as these ones, okay? Or even pesos to something else, a country that's not even a major. So you have the pound sterling to USD, which some of these have like nicknames. So we call this one the cable, but you don't really need to learn those. You have USD CAD, people call it the loonie. The Australian to USD, we call it the Aussie, so Australian dollar. Then this is USD to Swiss franc, so people call it the Swissy. USD to Japanese yen, Euro to USD, and New Zealand dollar to USD. So these are the major currency pairs. You'll see these often, and you're probably going to start by trading one of these currencies, okay? Now, you might be wondering, why do they have USD CAD and not CAD USD? Or why do they have here USD first, and then here you have USD second? Like, can you trade them, USD to Euro or Euro to USD? Well, there's a convention, and the convention goes as this. And, this is outside of course material, but it's just for your general information. Why do they do that? They have like a rule, and the rule is like, if there's a euro in the pair, the euro is going to go first. Okay. But then second, the pound sterling. So if there's a euro and pound sterling, then the euro will go first, pound sterling goes second. But if there's no euro, then the pound sterling is going to go first. Okay. So here, if there's not that, Australian dollar goes first. If not that, New Zealand dollar. If not that, US dollar, Canadian dollar, Swiss franc, Japanese yen. So this is like the rule that they have of which currency goes first. And this is, sometimes people, wonder, why is it like that? This is their convention. Now, for the other currencies, so let's say pesos or any other currency, which we call the minors, they're generally quoted against the USD, right? So you're going to see them next to the USD. That's how most people are going to trade them. Now, if you're not trading them against the USD, what we're going to call this pair is, we're going to call it a cross pair. Okay. So a cross pair is any pair that does not include the USD. So let's say, even if I'm looking at CAD, Japanese yen. Okay. So now you know what currency pairs are, cross pairs, major pairs, and we're ready to move on to the next lecture. So now that you know what currency pairs are, what are you going to do if you want to exchange a currency or buy or sell a currency versus another currency? We've already came to the conclusion that you're not going to go to the airport to exchange your currency there. You're not going to go to one of those foreign exchange shops. You're going to do it from home. Well, how are you going to do that? To know how you're going to do that, you need to understand the market structure in the foreign exchange world. The thing with FX is that it's a OTC market. What is a OTC market? An OTC market is a over-the-counter market, meaning that there's no central exchange where you go to transact on. It's not like the stock market, where if you want to buy a particular stock, it's listed on only one exchange. Like, let's say NASDAQ or New York, you have to go to that exchange to buy or sell that stock. In the FX world, it's not like that. If you want to buy US dollars, you don't have to go to the Fed's office to buy US dollars. You can do it anywhere with anyone. So it's over the counter. And because it's over the counter, execution prices will vary, right? This is a big thing. So if you want to buy some pesos, well, if you go to the airport, they might give you a really bad rate because they know you need it. If you go and you exchange it there in somewhere very touristic-y, it's going to be, more expensive. But if before that, like before I went to Mexico, I called a few shops here in Montreal and I started negotiating the prices. They told me, we're giving it to you for $14. And so I called somebody else. They said $14.20. I'm like, well, somebody else, I lied. Somebody else told me $14.30. Can you give me more? Okay, we'll match it. Okay, I'll take it. So, you can negotiate if you're doing something like that. But if you're trading online, the rates are going to be very thin. You can't call and negotiate. But depending on where you're buying from, you might have better rates, right? So it's important to know that the rates are not going to be the same everywhere. Now, the actual structure is like this. You have the interbank market, and the interbank market is where the huge banks transact with one another, okay? Now, these huge banks, they can transact through EBS, which is the electronic brokering services, or Thomson Reuters. These are the two options. They basically provide a order book for all the huge banks, okay? And when I'm talking about huge banks, I'm talking about Deutsche Bank, UBS, Citigroup, Barclays Capital, RBS, Goldman Sachs, HSBC, Bank of America, JP Morgan, Credit Suisse, Morgan Stanley. The huge banks. These banks account for approximately, I think, somewhere between 60 to 70% of all the volume of all the transactions that happen in the FX world, okay? So they have this order book where they can transact directly with one another, okay? Now, this is only available for huge banks. You cannot go and trade there. It's billions and billions of dollars every second, it's huge amounts of money, okay? So where do you come in? So this is the players, right? And the huge banks that I talked about, this is what we call the FX dealers. They're on the top. Now, other participants can't just go and trade with them. They can't go and get on this order book and say, I'm going to buy at this price, I'm going to sell, because they're too small, right? They're not going to accept them. If you want to trade, you have to go through one of them, okay? So the second level here is other big participants, and these could include other banks, right? So local banks that you know of, large companies, hedge funds, very big participants, okay? And these guys would go through one of them. They can go through, let's say, HSBC, or they can go through JP Morgan. They can go through one of these dealers. Now, where are you? You're still not at this level, because this is still huge money, okay? Now, there's another level here, and this is the level you're going to go through. You have Forex brokers and retail ECNs. We can just call this brokers, okay? And I'm going to talk more about brokers in general in the next section, or in a few sections maybe. But these are going to be people who take care of getting an execution for you, right? So you have to go through them. So a broker here is going to be going through one of these banks, which this bank is going to be going through one of these FX dealers, okay? So like there's a few steps here. And you have to open an account with one of these brokers. It's like when you buy a house, you get a broker, and the broker is responsible to get you the house that you want. Same thing in Forex. Or in stocks, you want to buy a stock. You open an account with a broker, and the broker, you give him your order, what you want to buy, and he tries to get you executed on that. Same thing. You want to buy, pesos. You want to trade that. Well, you open an account with one of those brokers, and you send your order. Now, what the broker is going to do, there's a bunch of different types of brokers, which we'll talk about later. He'll either take your order, batch it with other traders, and because otherwise you guys are too small, right? And send it over as a larger order. So it gets accepted. He has a deal with one of these other banks, and this other bank gets it executed, and you get your fill. Now, some other brokers take the trade against you. So you want to buy it, they'll sell it to you right away. right? But then as soon as they sell it to you, they might hedge their order by buying it from another bigger bank, and they're gonna have their own rules. They might be able to hold some risk. They might only hedge their risk if they have exposure to one currency way too much. But what you need to know is that basically you're gonna have to open an account with a broker, and your level is like way down there, right? So you're going through multiple people to get your execution. We'll talk more about brokers later, so you know which broker you should open an account with, because they don't all have your interest in mind. Some of them just want to make money off of you and that's it. But we'll talk about that later. But this is really the structure, and now you know where you are within it.